Well, I like crypto because I'm technologically a dinosaur. I barely use my cell phone. So I talk to younger guys, I consult to like high school kids because they grew up with the iPhone. So I know this one 19-year-old, she started trading at 10 years old on the iPhone. I'm like, what? So when I saw crypto coming out, I heard about it, and I think it went to 20K. But as you know, it always retraces, all booms, bust. So as soon as it busted, it went down to 1,000. Then I want to test the strength of it because I took technical trading courses. Technicalism, volatility, and this here is fundamentals. Income statement, balance sheet. When I watched the technicals drop, I said, okay, so Bitcoin this is years ago, went to 20, from 20 to about 1, I think, or so. And I watched it, and I watched the momentum pick up. So I came in at 6,000. So I bought at 6, about 60 coins, plus Ethereum. And as you know, your profit's made when you buy, not when you sell. So then I watch it scream up. Everybody's saying it's $1 million. I don't get sucked into the hype, because my rich dad taught me early on, your profit is made when you buy, not when you sell. Bitcoin. I almost bought it, I think it was 2017 when I was at 20,000. But I didn't, and I'm going to say this much here, okay? This is real financial education, but they don't teach you in school. So there's 3 kinds of people in the world when it comes to money. There's an investor, a trader, and a speculator. I am an investor. So the moment I started buying Bitcoin, I wasn't a trader. A trader is somebody's going to buy it and sell it. A trader, like in real estate, is kind of a flipper. They buy a house to flip it. That's what traders do. And a speculator is a gambler. And I would say most people who are chasing Dogecoins and all this other stuff and Bitcoin, and they're speculators. They're all kind of gamblers hoping it'll go up. That's not what I do. So I am an investor. So when Bitcoin crashed, I made more money. You see, and the guys who are losing money right now is because you're not a trader, you're a speculator.
As the governments right now all over the world are printing literally trillions of dollars, and they're trying to pay off debt that's denominated in dollars. So that means the US dollar gets stronger because they need dollars to pay off the debt. And when you heard that they were printing trillions of dollars, as a Bitcoin person, what goes through your mind? Is that good or bad for you?
If you are heavy in Bitcoin, it is good for you because Bitcoin has been inversely correlated with the dollar in terms of the dollar compared to the other basket of currencies. So if the dollar crashes or goes bad, Bitcoin is going to go up historically. That's just how it's happened. Bitcoin has also been tied to other assets, but only in various times. To get just a brief summary, Bitcoin was pretty much tied to the S&P 500 for a little bit. And then as the oil crashed in March, I believe, everything got liquidated. So Bitcoin is considered a risky asset because it is volatile. It was not shielded away from all the capital being taken out of the markets. So I just want to make sure that people realize it's not really correlated with any asset. I'd say it's like a hedge or actually insurance to any other assets that you're holding.
So many of those young guys out there, they're Bitcoin millionaires. But as the market started to crash, they became afraid. And the reason for that is because they got rich being speculators. They got lucky. They just happened to buy 10,000 Bitcoin at $1 each, and now they're multimillionaires. But as it comes down, and the reason they're afraid is if Bitcoin goes to 0, which it possibly could, I'm not saying it will, they're wiped out. So Bitcoin goes up, Bitcoin goes down, and all that stuff. It's not any different than gold. It's just more volatile because you guys are more tech savvy, and you can Reddit and GameStop and all that stuff, and you guys trying to corner the silver market. As I said, you guys are more sophisticated, you have more aware, but you don't have the experience yet. So keep going, but you'll get that experience. Institutions don't own Bitcoin, like the central bank doesn't own Bitcoin, because Bitcoin goes against the central bank. So that's why it's the Fed the European Central Bank, the Japanese Central Bank, Bank of England, they don't like crypto. That's important to understand.
I'm more afraid of Fed coin than anything else. It'll totally be central control of the economy and our lives. They'll monitor everything we do by how we spend our money. Our freedom will be gone. Right now, it makes sense to get out of the reach of the Fed and the Treasury. Fed coin is one more step into fascism. With this blockchain, they can track everything. They can track everything now.
What you're talking about is these Bitcoin, which I have tremendous respect for them. I understand it. We have the enemy in common. It's called the Fed, Treasury, teachers unions, and government, and the banks. The big challenge is this, as you know, if it goes to Fed coin or Euro coin or Yuan coin, the banking system's finished, because it's going to be pure Marxist, that the currency will be controlled through Fed coin. They will know everything you do, say, teach. Here I am, I borrowed $160 million. Where did that $160 million come from? Nowhere. I sat down, I said, here's my project. I said, this is how much money I need. I offloaded it to all my investors. And then the bank loaned me $160 million. So we had to come up with $42 million. So I got $42 million from my investors. The bank, voila, magically creates another $140 million. I don't know, the numbers just boggle me. And I pay no taxes. That's capitalism at its finest. That's the mechanism as of today. If it goes to Fed coin or Euro coin or Yuan coin, those banks are toast. And they're going to be able to trace everything you spend your money on and all this. So what does that mean? I'm looking into the future. I'm accumulating as much gold, silver, and Bitcoin, preparing for the day when it goes to Fed